Happy Friday, traders. It is Friday, the 27th of June, 2014. It's 8:02 a.m. Chicago time. As always, thanks for joining us. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of yesterday's action, or yesterday's the overnight news. Not much on deck. UK GDP came in for Q1, final came in line at 0.8%, quarter on quarter. German CPI year on year came in at 1% in line. Bank of America cuts US second quarter GDP from 4% to 3.2%. And then Fed's Bullard reiterates that the Fed is closer to hitting goals than many think. So thanks to yesterday, we saw a little reaction on that. Looking forward, looking ahead, the hang on. The calendar shows really most of what's on the calendar today will happen overnight. It's European numbers, minor numbers. Looking ahead, 8:55 a.m. Central, University of Michigan confidence. This is the final number at 82.0. That's all I have for today. Very, very quiet, potentially very, very quiet day today. Let's look at the charts. So yesterday, interesting open. I must say, yesterday's hypothesis, primary hypothesis, could not have been farther from what actually happened. The primary hypothesis yesterday was expecting responsive selling, if any selling occurs at all. So the idea was the market was going to open, and we expected some responsive selling back into the 48 and 45.75 area, expected it to chop in this value area, chop with an upward skew, and then walk itself up to take out this 53 and then 55.50 again, and then resume its upward trajectory to 1960 again. 1960 on a 24-hour chart is a weak high. It's been a double top. It's been tested twice, and that was what was expected. Instead, we got this open that was more of an open drive, heavy volume. If you look at yesterday's 15-minute volume, if we go back, here's the ES 15-minute volume. The yellow line here shows what's expected on that 15-minute based on the median of the last 20 days. So we take the median of the last 20 days and look at the 15 minutes, break it down into 15 minutes or half hour, whatever we want this chart to be, and it tells us what the current volume is versus the median volume. So the open wasn't so bad. It is when the ECB comments came out later that caused this massive spike, essentially saying that the ECB has some room to go lower, but it's not going to do so for quite some time. And so in this situation, the second 15-minute bar of the session normally, or the 20-day median of this bar, is around 66,000. We traded 211,000. You know, that's a strong indication that the market was getting something it did not expect. Almost 4 times, 3.5, 4 times the normal volume for that second bar. So we got this action here. Really surprising to me. I actually looked to buy and buy down here. Why? Because I still held that the thing I talked about yesterday, which was that the market actually found buyers on the extreme of the Fed day. So here's the Fed day announcement. Here's what I marked as the extreme of the Fed day announcement at 37.25. 37 even. And then on Wednesday, we opened on that extreme and had really strong buyers come in right away and bring it back into the value of the sell day, which was Tuesday. And so to me, it seemed like on Monday we advertised prices low enough so that on Tuesday a lower low was put in to complete this move, and we found buyers, and we ended up taking back the majority of the sell-off day. To me, that's a strong indication. That's what I would call a boulder in the foundation of context here. It's a big piece, in other words. And so this is what led to the primary hypothesis of a test lower into the 45.75. But really, if we do get any selling, but really we're looking for a base and then for it to climb out. And what happened was we pushed down and pushed through that that LVN zone low by 3 ticks, found buyers, and walked ourselves back up and through and out of this LVN zone again. So overall, the conviction is still on the buy side. It just did not work. Did not anticipate the news release yesterday, and that kind of messed things up a little bit. So that's the key piece yesterday. We left a very clear LVN right at the prior day's point of control at 45.75, and we're trading under it currently. We're trading at 44.50 with a point of control of 44.25. Yesterday is a clear double distribution day with the more prevalent distribution below, and the point of control is at the overnight low of 43 even. Is that a lot of information? Probably, but the market has spoken. It has shifted the point of control lower on Wednesday, and it did it again yesterday on lower low and lower high. Very odd way to make to shift the trend and start one time frame down. It's like a very hesitant trend down. So here we are again with the daily profiles and the value. Point of control higher, 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 slightly higher in line, and then it's starting, and then we have this kind of a blow off day, which was Tuesday. It tested new highs, and then it ended up finishing lower than the prior 3 days or the prior balance days, and it's starting to, and the point of control has been rolling over lower. So yesterday I expected this to be reversed so that we would have tested the FOMC range, which was poorly traded on that day. So the expectation yesterday was that we had done the work to finish what we had to do below, and then that we would start shifting the point of control up and start walking back up, and that didn't happen. So for today, let's look at the overnight session real quick to see if we can glean anything. The overnight session shows a lot of activity at the open, right? A weird high volume node there at one price at 49. But mostly the market's skewed down. It traded lower on the Asian session with a weak low right against the point of control from yesterday. Double bottom, this is a weak low. I expect the overnight low to be taken out at the open, assuming we don't walk away from it before we open. So for today, the overall posture of the market is that we would likely have a pretty choppy rotational type day. There's nothing here to drive. There's nothing here to drive the market in either direction, other than, you know, if the ECB comes out and talks again, or Bullard comes out and tells us that we're too optimistic again, or whatever. There's nothing to drive the market, so the expectation is that we stay in line. If we do get some selling, though, the target below would be 33, and we will have canceled out this buying day completely. and something, the context will have changed in the short term, then I would look for 1675 as the key target below over the next couple of days. But 33 for today. We do have some structures downstairs, below, that need that are not fully fully repaired or fully traded out, fully auctioned. So there's plenty of work for this market to do below, but I'm not bearish. I think that the market's trying to sell off. Participants are selling off or finding reasons to sell off, but the market's buying it back up, looking at these prices as too cheap to ignore. So we have to pay attention to that. So this morning I'm looking for a choppy open auction in range, right in the fat part of the profile, right in yesterday's acceptance in this chop here. Expecting a choppy open. We do get a number at 8:55, so 25 minutes into the open. I expect the overnight low to be taken. I expect it to try to explore lower, and then I expect it to be confronted with two-way action. I also expect the intermediate term player or higher term players or other time frame players, OTFs, to participate little on a Friday. So I expect business to be done early, and then for the short-term traders, the day traders, to take over, and that means back and forth chop. As I said, the value migration is lower. Okay, so the value trend is lower in the short term. So the short-term trend is lower, intermediate term trend is firmly higher, long-term trend is firmly higher as well. So we're likely to just chop around in this former LVN zone is what I'm looking for today. Potential additional risk factors, just the usual. Iraq, keep Iraq in the picture. The Ukraine is not a problem anymore. I don't think there's a ceasefire, and the Russian foreign minister said that the Russians want the ceasefire expanded even further. So that's calming down a little bit. The Iraq, Syria situation is fairly ugly, and that's going to continue to impact energy and gold prices. So you need to keep an eye on that. And then as far as a closing remark, I want to remind you folks that it is Friday, and as usual, it's important not to lose your mind or get emotional on a Friday and end up with a big hole in your pocket that can easily fester over the weekend. Just be patient. Make a plan for what you want to see or what you expect to see based on how you read the market, whether it's through moving averages, stochastics, fibs, MACDs, whatever your poison is, whatever your tool chest has in it. Just decide what is likely to happen given the stance of the market currently, and then wait for the market to show its hand and play its hand, and then decide to go with whatever plan you've set forth. So that's to me, that's the better way to, the calmer, less stressful way to trade. There's always risk involved, but at least this way you know what to expect, and when it's time to act, you're not looking at every little detail and finding reasons to act when there's nothing there, or not to act when something is there and according to your plan. I'll leave you with that. Have a great weekend. Stage 5 traders, we have a webinar at 12 o'clock. We'll go over our pop quiz. We'll talk again on Monday. Take care, everyone.